here's number 10. Yeah, let me zoom out a little bit. I know I cut off that little bit up there, but that should be all right. Okay, so here's the two thingies. Not sure if you can see it sort of like that. I want to try and make that visible and that visible. So, all right. So here's the thing. Chandler, he's a single taxpayer. He has an income of $119,000. Let's figure this out. Okay. So if you're at $119,000, you will be right here. Taxable income is 119. Okay. So what we do is we take 119. So we have to get the amount between these two. So 103, 350. And that will give us a result of 15,650. Okay. And now we take 16,650 and multiply it by our tax rate. Or this is our marginal rate. And that gives us 37.56. Then we take 37.56 and add it to this number. And that will give us a result of 21,407. All right, so this number right here, our marginal rate is 24%. And we have to find our average rate now. And your average rate your total tax liability and you put that over your taxable income. Okay, so what does that look like? That looks like 21,407 over 119,000. So that will give you a result of 0.1798. Move it twice, and then it gives 18%. That's what it rounds to. Yeah. Oops. All right, so that is that part A. I may, actually, you know what, let's just make the canvas bigger. All right, so we do the same thing for letter B. So we have 88,300. She's head of household, so we have to use this other one. Puts her right here. All right, so 88,300 and head of household. Okay. So we take 88,300 just like we did over here. Subtract 64,850. Which will give us a result of 23,450. Take that number, multiply it by your marginal rate, which is 22. You get 51.59. And we take 74.42. That's 12,601. Okay. And we said this was 22. So now we just have one more thing to do, and we have to find the, let's put the total tax liability, which is going to be 88,300. Over, actually, 12,601. That should give us 14.27. Okay, so, and then we round that to 14.3. Okay, so that's how you do that one. All right, so now we're looking at this problem, and let's see. I just want to show you the whole problem before we get into it. And that should be good. Okay, so let's make this a little bit smaller. It's too small. All right, so compute the taxable income for 2025 for Aiden on the base of the following information. Aiden is married but has not seen or heard from his wife since 2023. And first of all, before we get into it, we have to go through these. So cash dividend received on Chevron common stock, that is taxable. Salary is obviously taxable. Interest on bonds, that's not taxable. Life insurance proceeds, not taxable. Interest on a CD, that's taxable. Inheritance received upon the not taxable. And proceeds for repayment of a loan, not taxable. Okay, so that's what we have right here. So just these three are taxable. All right. So now we can just go ahead and add these up. You have a salary of 80K. Where's your cash dividend? 2,200. And the interest on Wells Fargo, let's see, it's 2,000. Okay, so it's 84,200. Okay. All right, so that would be all of the taxable incomes added up. Now, Aiden is married but has not seen or heard from his wife since 2023. That means he's head of household. Okay. So we have to figure out itemized deductions versus standard deductions. So he gets an itemized deduction of 19,500. So right here. And since he's head of household, he qualifies for 22,500. Okay. Okay. So that means you take the bigger of the two, which is the standard deduction, and that's what we go with, standard deduction. Finally, what is his taxable income? As we know, the taxable income is 84,200. It's the result of the minus the standard deduction. So this 84,200 minus the standard deduction that we had. And we plug this into a calculator, and it gives us 61,700. And that is the result of this problem. All right, so here's number 13 on chapter 3 homework. Okay, so first of all, taxpayer's son has... I'm not going to read all these, but I'll let you read them. So gross income doesn't matter for qualifying child, so not applicable. Same for this one. Gross income doesn't matter for qualifying child. Gross income is not met on qualifying relative. Met. C is not met. And met. D is met. Not applicable. E is not met. Not applicable. and not met. F, not met, not met. Relationship, what is this? F, not met. G is not met. And met. H, met, met, met. Oops, I didn't mean to do that. I don't know why I did that. Okay, so this one is met. I is met and then not met. Met, 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 and met, not met. That's that one. All right, so okay, I'm re-recording this one, and let me move it around a little bit just because I've had problems before. Okay. So first one is required, not required, not required, not required, and then required, and then yes, no, yes. That's the answer. All right, so we're just going to go through the answers just to make it go quicker. A is going to be 2. B is going to be 1. C is 2. And D is 1. Just try.